Hi, I'm Devin Peterson, and do you know how your Social Security benefits are taxed? Most people don't. And so today I want to take a few minutes to explain very simply how your Social Security benefits each year are taxed and how the IRS determines what percentage of that to actually tax. Now, recently in my office, a couple sat down and expressed to me their concerns about needing to take more out of their IRA than they had in the past. For this family, because of the cost of prescriptions and rising healthcare costs, their savings and their living expense budget had slowly been dwindling to the point that was concerning for them. But they were also concerned that if they took too much out of their IRA or increased their withdrawal, more of their Social Security benefits would be taxed, and ultimately the additional amount that they're taking out of their IRA would be offset by the taxes they need to pay back to the government. And so this was really concerning to them. So as we sat down in our office, I shared with them these simple facts on how Social Security benefits are taxed, and it really gave them a little bit more peace of mind. And I'll share with you at the end of the video how that experience ended up with that family. So simply enough, the IRS uses an arbitrary number called, or a made-up number called provisional income. Now, provisional income is determined by two parts to a formula. The first one is, what they'll do is they'll take half of your Social Security benefit. If you're married filing jointly with your spouse, they would take the summation of both of those and take half of your Social Security benefits and then add them with your modified adjusted gross income, or your MAGI. Now, your MAGI is a number that is your AGI with a few other elements added back into it, which as a retiree, the primary concern that you need to worry about is your tax-exempt income that's added back in to your AGI to create your MAGI. Now, for retirees, this is concerning because municipal bond interest or income is a big part or a core part of a lot of retirement portfolios out there. So that's something to consider. So provisional income is half of your Social Security benefits added to a modified adjusted gross income amount. And then based off of this provisional income number, then the IRS will tax your full benefit, your full Social Security benefits at a certain percentage. Now, those percentages are determined and changed every year, but for the 2018 tax year, if you are a single or a head of household and earn less than, or your provisional income is less than $25,000, then your full Social Security benefit is tax-free. Now, if you earn between $25,000 and $34,000, then up to 50% of your Social Security income is taxable. Now, if you earn $34,000 or more, up to 85% of your Social Security income is actually taxable. So the silver lining is 15% of your Social Security benefit will always be tax-free. But the numbers change a little bit if you're married and filing jointly. So if you follow on to the next column, if you're married and filing jointly and your income is or your provisional income is less than $32,000, then your Social Security income is going to be tax-free. Now, if your income is between $32,000 and $44,000, up to 50% of your Social Security income is taxable. And married filing jointly, if you have a provisional income of more than $44,000, then up to 85% of your Social Security will be taxable. So in retirement, as you're looking to take additional distributions from your retirement account or work a part-time job and add some more income to your adjusted gross income, your provisional income number is important to be aware of to make sure you stay within that certain threshold, so not more of your Social Security is taxed. Now, going back to the story of the couple that sat in my office, for them, we were able to determine with their specific modified adjusted gross income and their provisional income, we were able to determine that they could take $1,800 from their IRAs each year and still remain in a zero tax bracket for their Social Security income. So for that family, it gave them a lot of peace of mind knowing that they could take that additional distribution, take care of some of their prescriptions and healthcare costs, and not pay more in taxes. So thank you so much for joining us today. I hope you enjoyed our video, and make sure you subscribe below and join us next time. Thank you.